So recession and recovery, I've just got a few minutes. I'm going to go through very quickly. It's important when I say, is this a sustainable recovery, to know what we're recovering from. All recessions are not created equally. The main kind of recession we see typically is an income-driven recession. Prices go up, assets inflated, we get inflation, central bankers come in, raise rates, cuts off economic growth, and we go into kind of a loop. And then we grow back again. That's a typical business cycle recession, usually very short-lived. Other types of recessions, a single sector recession that happened in the dot-com bubble or in the S&L crash, something single sector, very focused happens. It drives a recession, but those are extremely short-lived, still hurts, but you recover because it's only recovering income and your capability to produce income again very quickly. Exogenous shock, by the way, the primary example of this is 1973 in the OPEC oil crisis, was a deeper recession than what we've just been through. So that kind of exogenous shock can really hurt, but we came out of that. It took 2 years, 73 to 75, to come out of that. But what I put forward is what we're going through right now is a balance sheet recession. So this is important in understanding whether or not this is a sustainable recovery. A balance sheet recession is when companies and, if you remember the slide, individuals lose part of their balance sheet. So companies can only go so far in reducing expenses to keep their revenues up, and then they start shedding debt. And that's what's happened to us. 2 instances of balance sheet recessions in history, in 20th century history. One is the Great Depression, the other is Japan in the 1990s. 16 years, just coming out of it now. Again, it's related to liquidity. If banks aren't lending money, the economy isn't going to recover. It doesn't have liquidity. But this is two-sided. Balance sheet recession also includes private investors. So investors in general, and again, primarily US investors, don't feel like their balance sheet is solid anymore. Now, the critical thing about a balance sheet recession is there are ways out of it, and what we've seen is these aspects: credit easing, quantitative easing, lots of jargon, glad to go through it later, but it's basically taking it beyond just lowering interest rates and now starting to borrow securities, putting government money, primarily US Federal Reserve Board money, into the economy. Ultimately, to come out of that, as I said at the outset, you need private investors to take up that slack. So we're going to need to see that transition. So, is this a sustainable recovery? Just to summarize, my answer is, and I wouldn't be an economist if I didn't say this, is maybe. But what I hope I've given you is an idea from the macroeconomic perspective and the capital markets insights, an idea of what we're following, but also what you can follow. To give you an idea of looking at what's behind some of the headlines you're going to see, to what's behind global credit markets, the US consumer, US banking stability, and US housing markets. Those are the 4 factors we'll continue to follow. Right now, liquidity is really important. If we don't continue to see liquidity, we're at a pivotal point right now that is the only thing that's going to sustain markets over the next few years.